then there's going to be a decision point. Like I like this right here. And here's what the decision point is going to be. We're bouncing out of a 4-hour zone. And we got to decide how much are we going to try and take out of this. Okay. So we've got a drop, a base, and a drop, and we're sitting right there. Already seen things. I'm giving me pause here, folks. I have a feeling I'm going to like the juice on the level, but I want to see where I'm going to get the clear. Okay, 5.3 to 1. That is solid. My concern is we're getting a really bullish move in, and I almost want to see where we can exit. And let that determine if I want to take the trade. All right, so how far away is that?
That's going to be about 3 to 1.
Let's see, 2.5. I think Mitch is right. That'll do. All right, folks. And what I'm going to do is, so I'm going to take the micro short there in just a second. What I plan to do though, instead of getting out like right at the 3 to 1 mark, I'm just going to get out a little bit before. If the trade goes my way, obviously it could just, we're bouncing out of a 4-hour demand zone. You know, that's not making me feel warm and fuzzy inside, but I also want to get the trade in play.
Thing that, I think I've been referencing here and there lately is the fact that the exit candle, and let me just expand this just a little here. The exit candle on the zone, if you notice right there, that's the low point. Okay, and I'm always a little wary where, I mean, technically it's not the exit candle, but it is a very, very bullish candle. And then, technically I guess that's the exit candle. But the fact that it just continuously goes down to the last possible second and it takes out this base area, I'm always a little wary of that. I always prefer to have the candle that kind of starts the recovery, if we're talking about a demand zone. I always want that not to be, I generally don't want that to be the low. I don't want that to be the candle in control. And this one, it's the exit candle is the candle in control. Okay. And so as a result, now we're coming back and you can see price just seems to be driving through. Now, is that literally the reason why it's happening? I actually think it is, but can I really swear to that? No. But I find that that's in a sense, I won't call it an odds enhancer when that's not there, but when this thing is there, I kind of consider it almost like a little minus on the trade. There'll be times that I will take the trade, but I always look at that with a little caution. And to some degree, if this was an A setup, I would actually kind of say, well, you know what, then it's a B or a B plus setup. It's no longer an A because of that. So I just kind of wanted to throw that in there. You've got a very, very strong, rocket ship out of here. There's just no trading level for us. Obviously, somebody with a different methodology and a different core concept, may have a great setup there. But for us, playing the supply and demand game, there just isn't anything there. So I kind of wanted to go through that. So Jeremiah, when you look at this, this is a good example of what we were discussing. That not every chart has a setup, even though you do have an energetic move here. All right.
And I'll add to that too, like Jeremiah, that it's more important you can see what you saw, then we refine, right? I think I said it's one or two other privately. This the same thing. So like Jeremiah, I think started at the end of August, early September, and it's more important you can see that big move, and then that what we just did, that stuff, that's like the easier part. Like it's like step one, get to see what you saw, and then we refine, and you get slow. Does it suck? It takes a little longer. Anything worth doing is going to take a little while. So like kudos to being able to see it, and then now it's just like to get it get it done right.